With that, I'd like to talk a little bit about the recent changes. A lot of this is based on a report that we publish or update annually. It's called the New Realities in Wealth Management Report. We've started that since the beginning of the crisis, and in that report we measure asset and advisor flows across the industry and see who's winning, who's losing. When we look at the crisis, the whole crisis was a bit of a domino effect. It started out in the mortgage sector, caught on with the investment banks, and the wealth management firms owned by the investment banks obviously suffered indirectly by it, but very severely. And a lot of the major wirehouse firms had to be rescued, had to be acquired. Merrill Lynch, Wachovia, Smith Barney was changing hands. UBS had to be rescued. As well as Morgan Stanley got funding from the government as well. So that market that makes up about 40% of the retail investment assets in the US, all of those franchises had major severe troubles surviving that crisis. Obviously, this is set off, again, a domino effect that has had knock-on effects on various other aspects. The second part, the independent space has flourished greatly through the trouble in the wirehouse space. We see now firms like LPL that have reached a level that is pretty much comparable to the wirehouses in terms of number of advisors as well as in terms of products and technology they deploy. Before, the independent space was typically smaller firms that weren't really able to compete as well with the wirehouse firms. Thirdly, and most important for this presentation, the online space has benefited greatly, and we're going to see numbers later on in the presentation how this has taken place and to what degree. But online has really been one of the big beneficiaries of this crisis. This whole change in market share has been due to elevated mobility of clients as well as advisors. Advisors have seen their clients leave and move to different options, and obviously before they see their book shrinking too much, they rather jumped ship and took the book with them to a different firm. So a lot of that has taken place. But also clients were disappointed by the financial services firms that have served them previously and have looked for other options. And they have found very often the option in the online brokerage platforms is very appealing to them. Another hallmark of this crisis is profitability, or the lack thereof. And the issues from large firms to the smallest firms is that asset volumes have been down, with obviously the fees generated from assets not being sufficient to stay profitable, as well as trading volumes have been down. The whole of last year was pretty much characterized by lacking profitability. We see that rebounding now. The markets have recovered to a certain degree. Profitability has been restored to a little bit. It looks better than it was before, still not back to the pre-crisis times. As a result, as a big result of the crisis, business models changes are taking place on two levels. With the wirehouse M&A that has gone on, we see a universal banking model taking place that is much more widespread than it was before. We have now two firms, Bank of America and Wells Fargo, giving it a shot that before only really Citi was playing that on a large scale, and not really well, to be honest, because they didn't really focus on integration all that much. Wells, very much cross-selling integration is a big topic for them. Bank of America is at it as well. We see also full-service firms embracing the direct model or the online brokerage model. And we're going to explore throughout this presentation why this is the case, but it certainly has also to do with the profitability. Serving clients in an online model is more profitable than through an advisor, or at least supporting the relationship with online capabilities can help increase profitability. Last but not least, regulations have been omnipresent, and obviously the government has mandated the regulators to change the regulatory frameworks, and plenty of regulatory changes are coming down the pipe. Some of them have been implemented, a lot of it is still to come. Grosso modo, in big terms, it goes from product to consumer focus. That's I think the echo that goes across most of the changes is really driving the industry towards a greater focus on the consumer.